Welcome. I am the FX Savant, and in this video, I want to talk to you about market execution versus limit orders and why market execution has been holding you back. If that sounds good, drop me a thumbs up, subscribe, make sure you like this video. That's the same as thumbs up, ain't it? But with all that said, let's get into the video. All right, let's talk about it. Market execution versus limit orders. Why limit orders are better. So a limit order lets you enter into the market when you want to play. So what does that mean? That means say you're a breakout trader, or say you don't enter with limit orders and you use market execution. All that is saying is that you're chasing the market. That means the move or the perfect entry that you're looking for has already happened. So if you're using market execution, that means that you're chasing the price that you should have gotten in. Oh, it looks like it's a buy now. It's breaking structure to the upside. You should have gotten on one of those structure breaks, not when the structure has already broken and the move is going up, the buy position is already going up. Now you're chasing the trade. It could easily reverse, come back, retrace, not necessarily reverse, just correct itself. You're in the right direction, but since you entered at a higher price point than what you would like to get in at, now your risk to reward is screwed. That means that if you enter in the ideal position and you put your stop loss, the ideal spot above or underneath structure, that means you will get a favorable risk to reward versus if you wait for structure to be broken and now you're entering on an impulse candle, on a breakout candle or anything like that. Now your stop loss still has to go in the same position, but it's wider. So that means your take profit is smaller. Your risk to reward shrinks. This is not when you want to play. You don't want to play when the odds are against you. The probabilities aren't in your favor. You want to play when the odds are in your favor. So the best possible point that you could get in is at win. What did you learn when you first entered into the market or first started learning about the market? You learned this simple concept that previous support, once broken, turns into resistance, and vice versa. Previous resistance, once broken and retested, should act as support. So if you know that concept, that's the easiest concept. That should help you place your limit orders where they need to go. If you know that concept, you will have greater risk to rewards because you'll be entering in where the market is supposed to respect levels. So you're going to be entering in prime real estate where the banks are entering in. They're entering in on structure. You're entering in there, you're going to have a favorable risk to reward. Also, you're going to have your entry protected. So not only once your entry gets triggered, no, I'm giving too much game off that. All right, so no, just go back to you enter when you want to play. So if you want to play at a certain price because it gives you a specific risk to reward, if it gives you a 3 risk to reward and you want to obtain a 3 risk to reward trade, you want to only enter if that risk to reward setup is given to you. You don't want to take a 2.5 risk to reward when you want a 3R trade. So limit orders are going to help you enter into the market when you want to play. You can't predict what the market's going to do. You also, and for damn sure, can't tell the market what it's going to do, because we all know how that goes. Everybody didn't try to tell the market what to do, and the market, he ain't listening. So limit orders are gonna let you play or trade when you want to, at the price you want to, not when the market is telling you, oh, it could be a good time to buy. You want to buy some? Then you buy and it goes straight into your stop loss. Yeah. Point number 2 is limit orders give you what you're searching for. Limit orders give you the freedom.
16 hours.
Market execution, you have to actively be there at the market, looking at the screens, looking at your trades. Is this a good time to buy? Is this a good time to sell? This structure break? Oh no, this is the candle now. Oh no, it's retracing a little bit. Oh no, it wicked to this area. I shouldn't buy. Oh yeah, I should buy because now we got an engulfing. No, see, you're doing too much. That's market execution. You're thinking. It's invoking emotions, invoking FOMO. You want to chase trades. I need to get in the market now because I'm at the market looking actively. I only got 4 hours to trade before I have to go do something. And this time I need to find a trade within this time period. No, limit orders are going to eliminate all that, which should help eliminate some FOMO, some fear, anxiety, whatever, any of the emotions that come about when you're pressing the buy or sell button for a market execution trade. So a limit order is going to say, hey, price comes down to here, then you'll trade. So until then, you don't have to worry. The market's going to do what it's going to do. If you don't trade today and don't open your MetaTrader 4 app, price is going to change. There's going to be candlesticks. It doesn't matter. We're not waiting on you. So if the market's not waiting on you, that means you're waiting on the market. And if you're market execution, that means you're sitting there waiting on the market to provide you with some sort of indication that you need to place a trade. Limit orders, the market is doing what the market's going to do. I have my trade there. If it wants to tag me along for the trade, for the win, so be it. But I only got 1 hour. So I got other stuff to do. I can only be on the charts for an hour. This is the trade I found. I'm gonna put a limit order and I'm gonna wait for this trade to activate, to trigger, and I'm gonna let it ride like that. And I'll monitor when it does trigger. It's my freedom. I'm getting it back. I'm not gonna spend my time searching for what I already have, the freedom to do whatever I want. I'm not gonna spend it looking at the charts. And that moves us on to point number 3. You can't really backtest market execution orders because it's something different every single time. Unless it is an actual, hey, rule-based system. If the trade breaks out 3 pips, you enter on 4 pips. If it's like that, then yes, it's back testable. But most of the times it's not. It's you looking at the chart saying, I think this is a good time to buy. I think this is a good time to sell. You can't go back to the charts and test that. How are you gonna test that? Going back and saying, 3 years ago, maybe I'd have bought right here and let's see how it plays out. And then now you go back after you see that trade was lost and you're I wouldn't have taken that trade. I wouldn't have taken that trade. Let me try the next one. Then this one, would this be one I would take? And it won. Yeah, I'd have took this trade. Now you're lying yourself. You're cheating. You're not getting better. You need to get better and actually do the right things. And market execution orders, unless they are specific when you enter into the market. Hey, at 9, I'm looking at this on the chart. If this happens, I will enter. If this happens, not, hey, if we get a bearish engulfing candle, I want to sell. That's market execution. That could be anywhere. 2 pips, 3 pips, 4 pips below structure, retest the structure. You could enter in before it breaks structure and go and play it like that and say, oh yeah, this is a good trade. Oh, market execution, I entered into this trade. Nah, limit orders are fact. They're rule based. I'm putting my entry here, my stop loss here, my take profit here. Let me play. Let me see how this works. Let me test this. Does this work? Hey, this trade won. All right, yeah, cool. Hey, this trade lost. All right. Oh, this trade lost. All right. Oh, this trade lost. All right. Maybe my market execution or maybe my limit order wasn't in the right spot. Now I can go back, retest. Let me see if I put my limit order here. How does this play out with these risk to reward ratios and take profits here and stop loss here? I can do this. I can repeat putting my limit order at a break of structure over and over and over again because they're rule based. That's fact based. That's not up for debate. Did the price break structure? Yes or no? Then I want to enter in where the price broke structure with my limit order. I'm gonna put my limit order where price broke structure. But yeah, basically that's it. You enter in when you want to with a limit order. You get your freedom because you're not sitting at the charts. You're just waiting to get triggered into the market. And also it's back testable. You can back test limit orders because you're putting them at a certain price point for a reason. Market execution is the opposite of all those. So you don't get to enter when you want to most of the time because the market is invoking emotions. It's wicking down, or it's in your prime area to trade for 3 seconds. Maybe it wicked down in those 3 seconds and wicked back out. And now it created a wick in that area. You didn't have time to make a decision on whether you wanted to buy or sell. The candle looked strong when it was full, but now that it's retraced, I want to buy, but it's too late because that price point has already been triggered. So you enter when you want to play with a limit order. Also, you get your freedom back. So now with a market execution, you're looking at the charts actively. So you're actively sitting in front of the charts waiting to trade instead of marking up the charts, doing your analysis, your technical analysis, and then waiting for the trade to happen to come to your area. So I can mark up the charts, do my analysis in less than an hour on all my pairs. But if I'm sitting there waiting for a trade to happen, that can be 5, 6, 7, 8, 9, 10, 11 hours from when I started looking at the market this morning. So limit orders are going to give you your freedom and they're also back testable. So you put your entry at this area, put your stop loss at this area, and I'm putting my take profit at this area. If the price does come and trigger my entry and I take the same entry on a break of structure at the same area every single time, I can back test that. Market execution is debatable. You can say, hey, this trade I would have taken. No, this trade I wouldn't have taken. Maybe taking this trade. So yeah, there you go. You see, limit orders are basically better. And ever since I started using limit orders, I've gotten better risk to rewards and my trades have looked cleaner as far as when I go back and look at them, review them, and they look at it on the chart on TradingView, it looks so clean. They look like I got a perfect entry at the right time, stop loss in the correct place, and my take profit at the correct place. When I would go back and see that I was using market execution to trade, they just look so sloppy in drawdown for ever, days, hours, depending on how wide my stop loss was, or prices straight to stop loss. It go in my favor, maybe one candle more than whatever time frame I was trading on. Say I trade on the 15-minute, I enter into a sale. The next candle is a small little sell doji, 2 wicks on both sides, and then price retraces a little bit, comes close to my stop loss. I'm blah, blah, blah. Yeah, it's jumbled. But since I've noticed that I've been taking limit orders, I've been noticing that my trades are a lot cleaner cleaner. They're easier to go back and review. They're easy to see what happened, what the intended direction was. It's easy to see my strategy when I go back and review these trades. I'm like, yeah, that's a good trade that I took. Yeah, I followed all my rules perfectly on that one. Yeah, that one hit. Oh, that was nice. Even if I lose a trade, it's like, well, my rules were respected. Market just didn't go my way. But with that said, let's go over this USD CAD trade that I had taken not too long ago. So as we always do, we're going to do a multi-time frame analysis so you really get as much knowledge from this as you can, as much free knowledge. So if we're on the monthly, in the recent price action, we can see that prices has just been making moves to the downside, breaking structure, creating structure, breaking structure, creating structure, breaking structure, and creating structure. So most recently in the last 4 or 5 months, we've been in this downtrend, correct? So we've been making moves to the downside. In these last 4 months, we've had an impulse to the downside, straight to the downside. All these black candles are my bearish candles. For you, they may be red, but we've had 4 bearish candles in a row. What have I said in previous videos? We have had this move to the downside. Price cannot go in one direction forever, so we need a little exhaustion, a little correction, a little retracement. Well, I know my fibs are good at identifying levels of structure. So my Fibonacci from this high to this low will show me the first level of structure the market should encounter on its correction or its exhaustion. So if price makes it up to 382, that should be the first level that the market sees some sign of struggle or big players coming into the market to continue this trend. Well, we've got that on the monthly. On the weekly, we see that we've had this impulse to the downside and we have bullish candles that are starting to turn up. So price is starting to curl over just like it did when it came down, came up, and we started to see some wicks before price immediately dropped. We started to see this turn of events. The same way down here, we're starting to see these last 3 weeks, the price has been closing higher than what it did previously in the last week. So there's our second sign that this market wants to show some signs of correction. And also on the weekly, what can we identify? Well, if we go over and we see this level here, we can see that this level of support, so every time the market has came into this level, we've seen an extreme push to the upside. So the price came in, broke this structure, came back, retested it, shot all the way up. Happened again here, came down, retested, shot all the way up. And from this, came down, retested this area. Are we expecting a move all the way up to the upside? No, not really. I don't care if it shoots all the way up to the upside, but I just know that this area, there are some big buyers down here at the bottom, down here at the lows. They want to buy low and sell high. So this could be enough to give me a favorable risk to reward. Let's drop down on the daily. On the daily, what can we see? We can see that prices came into this area, this support area again, and we are failing to break new lows. How can I identify that? Well, if I take a trend line and I draw my trend line from the high and I touch as many candles as possible, I can see that this trend line break is failing to break lower. So if we see we have structure here after the market broke through, so the market broke, came back, retested the trend line, this area, we created some sort of level of support, and now we're failing to break lower. We've came into this support area on the monthly where we have previously had big buying pressure, and we're starting to see signs that the sellers are losing control. The bulls are starting to gain control simply because we're not breaking structure to the downside. We've broke our downtrend and we're starting to see more bullish blue candles. So our bullish candles are starting to get bigger than our bearish candles. As you can see, we have an engulfing railroad here. We have an engulfing here. We have an engulfing here. Yes, we have the black candles that are closing down, but they're failing to break lower as well. But we're starting to see more bull pressure to the upside. So with that said, on the daily, identify this level here. Why this level? Because this is the area, this is the support level that was broken. So we broke below this support level. We want to see it get retested and respected. Whether it gets respected or disrespected, it doesn't really matter to me, but we want to see this price area get retested. So okay, from our higher time frames, we've identified our target. You know, we get our target from our higher time frames, our stop loss from our lower, our entry time frames. That way it gives us a favorable risk to reward, and we enter on a break of structure. So now that we've identified, okay, this area is acting as support, this would be likely where we want to see the market come to. Let's drop down on our entry time frame to see how we can enter into this market. On the 4 hour, our entry time frame, we have our zones marked up. As you can see, price failed to break higher, and then what did we get? I've spoken about it before in almost every video. We have a move down, a move up, a move down, a move up. What do we want to see price come to? After we have a W formation, we want to see price come to at least the neckline. Why the neckline? Because that is the most recent resistance, now should act as support. Once it does act as support and I start to see price breaking structure to the upside, I then drop down on the 1 hour. more. On the 1 hour, what can I see? Even better, even more identified. We have, as you can see, the structure here, which is also what? I'm gonna speak on it one more time, let you go watch the video. An inverted head and shoulders. Go watch that head and shoulders video if you have not yet. I promise there's some education in there that you didn't know. I explain it in a really simple way that even after I watched it, I was like, dang, bud, you did explain it very well. Even now, knowing what I know, I still understand it even better. So as you can see, price found a level in here. We broke this level to the downside, immediately broke back into the level, tested the left shoulder, failed to break the left shoulder, and we went up higher, creating a neckline. Neckline on our head and shoulders, inverted head and shoulders, inverted head and shoulders. It doesn't matter. We created the neckline. The neckline should act as support because this is the level that we failed to break once. We broke it, came back into it, created a regular head and shoulders. Okay, so we found a level in the market. We broke the level just barely, but we did. Those are my rules. How do I know? Because look at it and say, yes, did this market close above this wick? Yes, it did. And then after we got at close, we immediately came back into the area. I found support way down here or whatever, but we came back, retested the left shoulder, did not break above it, and we continued to go lower than that. Quick snippet, but yes, more importantly on this buy position and why this limit order was so important and so instrumental is because we had an inverted head and shoulders, which is a bullish pattern. We want to see price come retest the neckline. That's the basis of the premise. So there was all this action that I could have entered into the buy. And if I did enter into a buy, I go from a 4.75 risk to reward all the way up to a 2.5, which is 2R. Two trades I could lose and not be worried. So without those 2R onto my trade, not only does it take away from my profits, but it also makes my losses more important because now instead of me having more to lose as far as profits built up, losing 1% of 4.75 is a lot different than losing 1% of 2.5. So let's just keep that in mind. Yeah, limit order down here at structure. So we want to see price come back, retest this neckline of the inverted head and shoulders. Yes, I'm on the 1 hour. It is not as detailed as the 15-minute. So if we go to the 15-minute, you can see that this was the structure level holding price right in here. We were all through in here because we failed to break above it. And then once we did, it was basically a false breakout. But you can see that every time price came in here, broke it, came back in, retested it, came back in, retested it, came back in, retested it, immediately got rejected. Then we broke it to the upside. So that's the area I want to play at. But I know that if I move my entry up here, I get a less than a 3 risk to reward. And for swings, I don't want to take less than a 3 risk to reward. So I put my entry where I think the lowest possible spot the market would go before it turned around. And where did I put my stop loss? I put my stop loss below structure. Why? Because that's where it has to go. If I'm wrong on this trade, it probably won't hit my stop loss and go to TP, which is something that I'm really glad about that I do. It keeps that revenge trading aspect out of my head because I know that if my stop loss is taken out, then my original position isn't still true in my trading experience, my trading rules, my trading strategy. So it keeps me from FOMO trading as well. But yeah, put my stop loss where it needs to go, below the structure, put my entry at the lowest possible point that I thought price would come to before it made its move to the upside, because if it breaks my entry and my stop loss, it's more than likely not going to go to take profit. So let's play it forward. What happens? Almost. You almost got by. You almost got by me, but I'm gonna pull it up. So USD CAD, we're gonna buy USD CAD. So you know, it's the real deal. It's the real deal. 208.75. 1.20875 is the entry. Stop loss at 1.2053. 4. Take profit at 1.225. So yes, it's on screen. But yeah, now let's play it forward. Okay, we got triggered into this market. We had a nice rejection right on our entry. Nice little rejection. But if we play it forward, we can see, oh, there's a little bit of drawdown. Came close to the stop loss. Still wasn't risk-free yet. Didn't go risk-free yet. But that's what I want to speak about is if you look at the beginning, say you entered up here and you wanted to have a 34 pip stop loss. Well, your stop loss is pretty much hit because from 5 pips. So say you instead of waiting for price to retrace 15 pips, you enter into the market. It goes down to where your stop loss shouldn't be hit. It goes down into this area because you should have your stop loss below the structure. It should be below the structure. It comes down to the structure, tests that, you get stopped out. You have 35, 34 pip stop. You get stopped out somewhere on this move only to see the market extremely reject that area and shoot back up. So we're not risk free yet, like I said, but What does the market do? Comes down, tests our entry again, doesn't really test the stop loss, but tests our entry. Not risk-free yet, not risk-free yet. The rules of my strategy says that I should wait to go risk-free, letting it play out. You see that, yes, we're up risk-free now. Now we're risk-free. Price comes to the entry. So what? We don't lose this trade, but we're out of the trade. Price has been making highs, made a double top, and then what happened? Price continued, made an impulse to the upside. Prices continue making higher highs and higher lows. Okay, so as you can see, nice and easy to sit through. TP was met. We used a limit order instead of market order. Look at all this noise, all this just fear-evoking candles, all try to get you to trade at market execution. And what happened? Yes, we are bullish on this market. I'm bullish on this market, so a buy position is where I want to be. Yes, if you're in a buy position, you were technically right on this trade. We failed to break the trend line, failed to break lows, all that and all that good stuff. So as you can see, all this is just emotions. It's emotions. Oh, price is breaking up. Look at this engulfing candle from the lows to try to get you to buy. All right, you should come wait for a retest of structure. What level did it break? Well, here's our support level. All right, well, price broke this structure. You should wait to enter in on the retest of structure because previous support now turn resistance. Once broken as resistance, once this resistance level is broken, it's coming retested and acting as support. This is a perfect entry, perfect place to buy, perfect place to put your entry right in here instead of trying to buy at the highs because we broke out of this area. Now I want to buy over here, buy over here. Price did a retracement, hit my stop loss, came close to my stop loss. Maybe you closed the trade early because of the price action that you were seeing. Oh, we got failure to break the highs. We have a double top. Oh, you exited your position, only price did not come and hit my stop loss. But yeah, basically I just wanted to go over why limit orders are goated and why that really helped my trading over the last few years become more consistent. It's easier to track your trades if you are entering into the market at the same area with the same reasoning than it is to track or backtest your trades, go over, review any of your trading history if you're doing it out of emotion, because you would need to have that same emotion in order to have the same result on the market or be able to test and retry the same things to understand what your percentages are, how your backtesting is doing. Is your strategy profitable? You would have to be able to put yourself in an emotional situation, which is hard to do because every candle is a different situation, a different thing. Every second is different. Something could happen that didn't happen 5 minutes ago that now happened, and you're looking at the trade with a different emotion. So it's harder to backtest, and more importantly, market execution forces you to be at the charts now. Like you have to be looking at the chart right then and there. So it's taking away from the freedom aspect that trading is supposed to give you. Use limit orders. You can enter into the price point that you want, and you can take your trades. You don't have to wait on the market. You don't have to hope the market's going to do something. It's more consistent. That's the whole video right there. More consistent is limit orders. And in your trading, you should try to become more consistent with everything you do. Whether it's wrong or it's right, do it the same every single time so you can identify what's wrong and what's right. So that's it, man. If you enjoyed this video, if you learned something new, drop me a thumbs up. Make sure you comment if you want me to talk about anything else in my next videos. Make sure you're subscribed. Until next time, I'll holla at y'all.